This is Chad Stacekel from Eagle Wealth Management with our educational economic update for May 2018. In this month's video, I'm going to discuss some of the major headlines that influenced markets in April. I also hope to provide some insight into what these developments could mean for you as an investor. Well, market volatility continued in April, but for the first time in months, all three major domestic indexes ended in a positive territory. The Dow and S&P 500 each had marginal gains for the month, but both indexes are still down overall a little in 2018. While the Nasdaq added a fraction, it is actually slightly positive for year to date. The start of corporate earnings season was easily among the most important financial occurrences last month. By April 30th, the majority of S&P 500 companies had released their first quarter 2018 earnings report. Much of the news was positive, as 79% of companies exceeded expectations for their earnings. In fact, by some measures, this earnings season is the best on record. However, while corporate earnings results were strong, stock prices did not experience large jumps in response. For companies that beat their expectations, the resulting stock increase was on average less than 1%. Why wouldn't strong earnings cause large equity increases? This may have happened, in part, because investors saw any quick stock price increase as opportunities to sell for profit. But with trade wars, treasury yields, economic growth, and more, investors had many topics on their minds. Let's briefly talk about how some of these topics affected markets last month. The possibility of a trade war between the US and China worried many investors in April. Early in the month, one poll showed that over a third of financial strategists believed that a trade war was the biggest threat to the stock rally. By month's end, U.S. Treasury Secretary Steve Mnuchin was planning a visit to China in hopes of preventing the trade tension from escalating further. Yields in the 10-year Treasury were also a topic by many investors. For the first time since 2014, yields rose above 3%. This level is a psychological benchmark because rising above that rate can cause investors to leave riskier vehicles, such as stocks. By April 27th, yields had dropped back below 3%. On that same day, we received the initial reading of first quarter gross domestic product. The economy experienced 2.3% annual growth between January and March 2018. Slower than the fourth quarter of 2017, but faster than analysts expected. Looking back at April, both the economic data and headline-driven news seemed to mimic the monthly performance the indexes posted. There was a lot of action and talk, but the end result was to move just a little bit, but seemingly in a positive direction. Well, that's it for this month's educational economic update. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, feel free to call us at 541-330-0220. We'd be happy to talk with you. Once again, this is Chad Stacekel with Eagle Wealth Management, signing off for the month of May 2018.